Hey, welcome back to Subject to Change, a video podcast where we answer your personal finance questions. My name is Nick.
And I'm Chris, and today we're going to talk about life insurance while being unemployed. What is this about? Well, let's read the question a little bit deeper. I'm currently unemployed, making about $500 a week from unemployment. I'm taking care of my mom, and she is going through chemotherapy and brain cancer. Ideally, the plan is for her to make a full recovery, but a realistic outcome is that she'll need assistance the rest of her life. We have no family to care for her, and I'm wondering if it would be a good idea for me to get a term life policy so that in the event that I pass, she'll have a decent payout to have a caretaker take care of her or an assisted living facility. Do life insurance even offer policies to unemployed people? Are the rates worth it? What's the deal? This question comes from us on Reddit from Tafada. And I'm here to say life insurance companies, they want to make sure that you can pay the bill, I guess. But as long as you're paying the bill, they're really not looking at whether or not you're employed. You have any experience with this, Nick? It could be a complicated question here.
Yeah, I think there's a lot of different moving parts in that. I don't have any personal experience specifically of getting life insurance while unemployed. Like that's its own kind of bucket that I think we can discuss. But I mean, I think what I do know, so my parents happen to own an assisted living facility, so helping take care of people just like this person's mother. And I think you don't think about it until you make it to this point. It happens. It's like the same story over and over. You don't think about long-term care until you're in that situation. It's expensive, and it's
not cheap, is it?
No, and I think it isn't, at least specifically from my own experience talking about it. It isn't just the facility that you're paying for. You're paying for food and meals and care,
right?
Medication management, laundry, driving to doctor's appointments. There's a lot that comes in that fee that I think even if you lived independently, the numbers kind of end up looking similar. So if you're thinking about long-term care, a lot of families struggle to come up with the money. There's obviously government programs out there that can help match what you're able to pay or subsidize some of those payment costs. But I think, first of all, it is smart to be thinking about what does it look like caring for a person over the long term, and at least planting that seed while you think about something like life insurance.
Well, let's back up life insurance a little bit, because I think what you just shared is interesting insight for the what this could be used for. But going back to the how, do you get life insurance or does it make sense? I would think that the majority of people get experience or exposure to life insurance while at work. When they're at work, there's supplemental life insurance to something that you may already have, or your employer may offer life insurance for you through part of a group benefits plan. And a lot of people, that's kind of their first forte into life insurance is what they get when they're at work. But the challenge with getting life insurance while at work is what happens when you become unemployed. And the big issue with that is you become unemployed, then you no longer qualify to have the life insurance. So you just basically paid into this life insurance that you don't even get to take with you, right? Now, there are some programs out there and some caveats and things that you can do in terms of taking with, and we're not going to jump into those today in terms of COBRA and things like that. But it is smart to always have some type of term life insurance policy that's outside of your job. That way, if you do become unemployed or you don't have access to that insurance anymore, you still have insurance. But in terms of term life insurance, there's a couple of components I think we need to talk about in order to really answer the question here. How is life insurance calculated? Well, one is it's going to be your current age and your health. How healthy you are is going to determine what the cost is. So when the user asks, is it even worth it? The rate's even worth it. That's really going to kind of be determined on what the current age is of the person and then how healthy are they today. And the life insurance organization is going to then put them into a category to determine what their premium is going to be, right? And so that's basically your cost per $1,000 of insurance is based on whether or not you are at a tip-top premium or excuse me, tip top health, and so your rates are going to be there, or are you not doing so hot and you're down here? One of the challenges with life insurance is when you have family history of certain type of medical events. So just from the fact that this person is talking about the fact that they're taking care of their mother who is going through chemotherapy for brain cancer, that in itself is going to probably come out during the screening, which could put them in a tier that's going to cause the insurance to cost more. So I think that's something to take into consideration.
That sort of stuff? Like while you're doing I know I've looked briefly at life insurance online, and it'll ask things like, are you a smoker? I feel there's basic questions, but how do they dig into that sort of thing when they're coming up with a premium or what you qualify for? How do they get that information?
So there are some more modern insurance companies out there that kind of grade you based on kind of a populace or like a large group, and they can get around things like blood work and stuff like that. But most insurance and most traditional insurance companies are going to have you fill out a pretty in-depth questionnaire, and they're going to ask you straight up, does your family have history of these types of things? And so it's best to probably not lie in those situations. They're also going to ask you for the names of your doctors, and you're going to release your medical records to them. So, you've probably been to the doctor before, and when you sit down at the doctor, they've asked you to fill out the forms, and they say, tell us about your medical history. Tell us about your family's history, because your doctor needs to know about all the things that have gone on with your family and in your past in order to appropriately give you kind of care for the future. And they're going to ask for access to your medical records, right? So they're going to be able to go into old medical records you have when you filed for health insurance and things of that nature, and kind of see what types of claims have been made in the past. And so they're going to know a lot about you in terms of what type of health that you've had in the past, in order to determine what you might have in the future.
So they really dig into, like, before you can even, I guess, get life insurance or sign up, they really go through the process of figuring out what to watch out for, your risk level, and that sort of stuff.
Yeah, especially if you're going after like a well-known, A, AA, AAA rated insurance company that's reputable, that is going to give you a fair cost for insurance. Because remember, it all boils down to the cost of insurance per thousands of dollars, right? So for every $1,000 of insurance you get, there's a certain cost that you pay in premiums for that. So that's kind of the first step in terms of what the cost is going to be. The second step is that the amount of insurance that you can actually get. So if I, for instance, said, hey, I need to get life insurance, right? And I said, I want $100 million in life insurance. I mean, would you give me $100 million in life insurance? What's going on with you? That's a lot of money, right?
Right.
Or, I want $10 million in life insurance, or I want $1 million in life insurance. So depending on the amount of life insurance that you want, it's going to be based on a few factors. One of those factors are, what are your current assets and liabilities, right? So can you justify needing that much insurance? Does your income or does your net worth justify having that level of insurance? So a good rule of thumb out there is that, you should have insurance that's somewhere around 6 to 7 times your annual income. Okay. So if I'm this individual, and I'll do a little math on the computer here, I got $500 a week, and there's 52 weeks. That's $26,000. $26,000 times 7, let's say, is $182,000. So, in my generalist brain here, I'm thinking somewhere between $100,000 and $250,000 outside of any other types of liabilities or things that this person may have. That's probably a good rule of thumb of how much insurance they could afford to get, $250,000.
Is that in conjunction with the like tying it in? Is that in conjunction with the cost of the assisted living? So that's their income that they're trying to cover for. Is that in addition then to what, you're paying $3,000-$4,000 a month
But
for
see, in this
assisted
case, they're
living care.
not paying for assisted living. She is actually providing the care. And so because she's providing the care right now, the cost of assisted living is not calculated into that. It would have to be calculated into, like the liability, right, down the road. And so you could make a justification that you have, that is an out-of-pocket expense. And an insurance agent may work with you to underwrite something like that, where, you could tie in that liability. But I think it's important to note that you need to understand what that cost is, because if you estimate that cost to be somewhere in the $1 million to $2 million realm, and you're trying to get term life insurance on yourself for that amount of money to cover that, but your income and your assets and your liabilities really only justify somewhere around $250,000, it's going to be a big stretch for an insurance company to say, okay, we're gonna give you that much money because you have this liability. Because that liability really only comes to fruition, at death, right? It's not necessarily, and they sell things like long-term care insurance and things like that for people during their lifetimes, but that's something that her mother would have had to have purchased ahead of time. Not something you can't really, I don't think, get it on you for somebody else.
So this may not, it may be, correct me if I'm wrong, but what I'm hearing is this may not be the best financial move to solve the problem that they're trying to plan for.
Well, I think it's a tool that you should utilize, and I think the lesson in here is that we all should be utilizing it, because we want to basically have term life insurance that when something happens to us, it takes care of those liabilities that we have and provides for the future income that you're missing out on, especially if you're a caregiver. I mean, I'm a father of two, a husband. I'm the breadwinner in our house, and so I have children's colleges to think about, weddings to think about, all of those things that I'm thinking about in my head that I'm saving up for. And so when we calculate kind of the insurance that we need, that's kind of all built into there. But as that number continues to grow, go back to what we talked about, you have that premium, that cost of premium. The more money you have, now all of a sudden your cost of premium goes way up, based on the fact that you want a lot more insurance. And so the question then becomes, if she needed, let's say, $1 million in insurance to cover this, does the income she even has today, the $500 a week, is it going to be enough to even cover that insurance? And so you're going to want to, kind of do the math on that. But at the same time, you should have insurance.
Right.
Right. And you want to maximize the amount of insurance you can afford with what you need. And I think that's important, because you don't necessarily want to cripple yourself with these large insurance payments because you're scared that something might happen and you're protecting for everything, and you make $500, but now I got $300 in insurance payments. But by golly, if something happens to me, it's paid for. But now I only have $200 extra in cash each week, right, to pay for the things I need. And, what if you never use the insurance, and then all of a sudden you just paid all of this money for something that ultimately you never even needed to use. And so when buying insurance, it's striking the right balance between what you can afford in terms of the cost of the premium versus what you're trying to protect against and hedge against. And especially with term insurance, you have to remember, term insurance is not forever insurance. You're buying it for a specific term. That might be 5 years, 10 years, 15 years, 20, 25 years, 30 years. And so, once that term runs out, you no longer have that coverage.
Well, I think similar to what we were talking about I think we were talking about credit cards in a previous episode. It's tough to talk about financial decisions like this in a vacuum, because there are so many other things in this person's financial life that they have to make sure are kind of functioning properly.
Right.
And then figure out how much money can I reasonably spend on life insurance. I wish there was a calculator you could just put stuff in and it go, this is exactly what you should do. but there's a general sentiment, like you
Yeah.
said, that everybody should be looking at life insurance, but there's no one size fits all. You make this much, this is how much you need to cover for, and this is what you
What
need to do. It's
and
a
the reality
person
is if she went and looked and said, "Hey, I make $500 a week, but I can really only afford, $15 a week to go towards life insurance," and then you go, "Okay, well, there's 4 weeks, 4.5 weeks in a month, so we're talking somewhere around $60. How much insurance can I get based on my health for $60? You go shop that
Right.
around. You find out, oh, I can get $200,000, or I can get $100,000, or I can get $500,000, whatever it ends up being. And then you can say, okay, well, with that $500,000, what kind of care can I provide for my mother? The other step in that, though, isn't just providing care. You would also have to set up some type of trust, right? So you're going to have to get an attorney involved. Especially if your mother's in an assisted living facility, you're going to have a living trust that essentially, if when you die, that money goes into that trust, and then someone has to be appointed an executor of that trust to become the trustee to actually execute what your will is in terms of how you want that trust to be paid out, so that your mother would be put into this facility, and that money, and that's, that could be thousands of dollars to set up something like that. Mm-hmm. And so it becomes a bit more complex and challenging that perhaps this scenario, given her financial situation, isn't necessarily the best one. But what I do like about it is that we're thinking. We're using, thinking outside the box. We're protecting ourselves in case something might happen, like using life insurance. And it definitely is part of your financial plan. If you don't have some, you should have some, but making sure it's reasonable based on what you can afford versus also what you can get and what type of protections you're trying to put in place.
Well, I think in situations like these, like you said, this is a very complex situation. I think sometimes just knowing what you don't know, just learning about the situation helps you start to frame an answer that makes sense for your situation. Because at least with something this complex and talking about assisted living and long-term care, there's so many moving parts to that. Like you said, setting up a trust, how much is it going to cost, setting up, what's it called, where power of attorney for somebody else, maybe depending on the health situation of this person.
Right.
It's all these things that start to multiply, but just being aware of them and what the options are, I think helps at least make a more informed decision.
And putting them into place before you actually need it. One of the things that resonated with me at the beginning of this talk was that you said a lot of times people, don't think about that situation until they're in it. So they don't realize the cost of long-term care or assisted living facility until they're actually at the point where they need it. And it's a good rule of thumb to start thinking about these things while you're healthy and putting them into place today, so that when you do need it, you are protected and you don't have to, be stressed out and put in a situation where you're dealing with that at that time.